What's up everyone, this is me Ali again and I warmly welcome all of you in another forecast video. Guys, yesterday the market has moved exactly in line with our forecasts. For example, we spoke about the precious metal gold and the Euro USD. Gold was striking a bullish turn because there was a sort of a safe haven appeal in the market due to US China, the ongoing tensions between the US and China trade war related things. And besides that, the COVID-19 is consistently coming up with the new cases around the globe. While there were some more developments in the market, but right now, if we speak about the fundamental side of the market, the economic calendars are a bit muted. Like, we do not have any major economic event which is likely to drive some major price action in the gold or on any other currency pair. However, the market is most likely to move based upon the technical side of the market. So, switching back to the technical side of the market, let's take a look at the gold. In front of us, we do have 1 hourly time frame chart for the precious metal gold. If you guys can recall, or if you guys see our previous video, like from the yesterday, gold was trading somewhere around 1685 level, and it was testing the 38.2% Fibonacci level. The MACD and the RSI was coming out of the oversold zone, and there was chances that gold is likely to go after 1700 level, which it exactly did. So if we take a look at the market right now, gold has not only completed 38.2% retracement level, but this is also heading towards the 61.80 retracement level, which is already met, by the way. On the way to the upward, if I zoom in on the precious metal gold chart, you can see that the gold price section was so strong that it has violated 61.8% Fibonacci level. It managed to close above 50 pairs exponential moving average, and it also violated the 1700 mark for the for the resistance level. Anyways, the market was not able to sustain here. Gold started falling down because there is a lack of safe haven appeal in the market. Let me tell you why there is a lack of safe haven appeal in the market. Basically, the US economic events, for example, the non-farm payroll, unemployment rate, and the jobless claims were not as bad as these were expected to be, which is why investors are expecting that there is some development, some betterment in the United States, which is considered as one of the biggest nation of the world. So if one of the biggest nation of the world is getting better, so definitely there is nothing to worry about, and probably sooner or later things are going to be back on track. So for now, the precious metal gold is facing resistance. Like, there is a regression channel. This one, the blue and red one, is representing as the regression channel. Technically, gold needs to drop down until, like, let's say 1688 level. As you see here, the market has formed a bearish engulfing candle, which is followed by another bearish engulfing candle, and this candle is crossing the 50 pairs moving average from the upper side to the lower side, which is known as a bearish crossover. And guys, the bearish crossover typically drives the bearish trend in the market. At the same time, if we take a look at the MACD is still in the bullish side, but right now the histograms are becoming smaller and smaller, and very soon we can expect market to drop into the bearish side of the market. So maybe as soon as we see the market, particularly the MACD, or which is also known as MACD, continues to form candles below, or histograms below 0 point, and then market comes out of this upward regression channel, we can expect market to drop down towards 1688 level. However, if market continues to go above 1698 level, then we can expect some bullish movement in the market. But right now, below 1698, I would suggest that we should stay out of the market right now. We should not look for buying position anywhere around this corner. Only if market crosses above 1698 level, then we can look for a bullish position, and market has the very immediate resistance around 1704, while bullish breakout of 1704 level can extend buying in gold up to 1713 level. While conversely, if we take a look at the lower side, below 1698 level, gold has the immediate support somewhere around 38.2% resistance level, which is now working as a support, by the way, because if you guys remember, the bullish the resistance, when it is violated, it works as a support. So right now this is going to work as a support for gold, which is around 1687 level. You can see on the right hand side of the price, and below this, the very next support is going to be somewhere around 1682 level. So guys, that is pretty much it about the gold forecast. Keep following us, and so that you can get to know about the more trade ideas. For now, that's all. Take care of yourself. See you guys again very soon with the latest update. Until then, bye bye everyone.